Now, to take or to know more about RR Cable, we have Asta with us to take the conversation forward. Welcome to the show, Asta.
Thank you, Kshitij. A very good afternoon to you and all the viewers over there.
Thank you so much for taking our time. Now, Asta, the company is a leading player in the Indian consumer electrical industry. Tell us more about the business model of the company.
Sure. So RR Cable is definitely one of the leading player in the wires and the cables industry. So there
Hmm.
are basically into the consumer electrical industry, which is comprises of the wires and cable business as well as FMEG business, that is fast moving electrical goods. So most of their revenues, that is more than 70% of the revenues at present is coming from the wires and cable segment, and remaining is from the FMEG segment. So this company is basically into that, and they have a history or a track record of around 20 years. And this company is having a strong market share, because if we talk about the Indian wires and cable market, they enjoy market share of 5% here. And even if we talk about export, because this company is exporting its products too. So in exports also, they are having the market share of 9%. So they are enjoying a very strong market share. And I mean, it is a growing company. We can say it is a very young company, and they are growing, because young in the sense if we compare it with the peers. So it is one of the high growth company with a very strong CAGR revenue growth of around 40%. This is, I'm
Okay.
talking from FY21 to 23, and it is very strong if I compare it to the peers like Havels, Polycab, Pinolex, you name it. I mean, V-Guard. So if I compare it to all these peers are having the CAGR growth of revenue not more than 30, but here, RR Kabel is enjoying the CAGR growth of more than 40%. So again,
Wow.
it makes it a different or a unique from its peers.
Right. Definitely a high growth company. That's what we can say. Looking at the numbers now, the IPO comprises of a fresh issue of 180 crores. There is also an offer for sale segment of 1.72 crore equity shares. What does the company plan to do with the money?
So the company is planning to, repay certain of its borrowings from the
Okay.
issue, from the proceeds from the fresh issue. So this is one of the major object of the company, why it is raising the fund. While offer for sale is comprising a quite a, big chunk of this whole issue, where the some of the selling shareholders will be offloading their stake.
Right. Now the company has fixed a price band of 983 to 1035 rupees per share. Investors can bid for a minimum of 14 shares in one of the lot. Does it leave anything for retail investors on the table as well?
So if I talk about the P multiple, then they are coming at a P multiple of 61. So now if I compare it to the peers, so some of the peers are enjoying, high valuations, high P multiple, while the industry is quoting somewhere at around 44 to 45. So it
Right.
seems a little overpriced if I take on FY23 profits or EPS basis. But going ahead, what I believe, since the company is a high growth company and they have acquired one company recently, that is the Luminous fans and lighting. So now
Mhm.
this by this acquisition, the company is evolving rapidly into the FMEG space. Now FMEG space is a high margin space as of now, and this company is now moving towards going towards the high margin business also. So that is
Okay.
making it attractive. And I think on the forward multiple basis, it looks somewhat reasonable to us, because if I talk about forward multiple, then this company is making the issue or bringing the issue at around 40 P multiple. This is, I'm
Mhm.
talking about FY24 expected earnings. So on that basis, this company is looking reasonably priced.
Wanted to understand that what is the long term growth looks like probably in the next 2 years. Do you think that it will continue with the growth momentum?
Sure. So here, one unique point about this company is that 11% of their revenue is coming from FMEG business. So this is
Right.
one of the highest in the peers. And this FMEG business is a high gross margin business. It is a margin accretive business. So definitely going ahead, we think that company will be able to
Mm.
post strong set of numbers. Another point is that most of their sales is coming from B2C sales channel. So B2C
Okay.
is, business to consumer is again a very margin accretive business. Here also the margins are high. And if you
Mm.
have to create a strong brand, especially when you are into the B2C segment, then definitely it requires lot of investments in the advertisement. So they have built their brand, and in
Mhm.
not only in India, abroad also, because they export also, and they have a export in export they have a share of 9%. One more important point is that this is the company which have got 35 international, certification. So what
Okay.
happen if you go abroad and
Mm.
sell your product? Certifications are required, and
Mm.
here this company is having lot many certification much higher than it appears.
Absolutely. And what about the financials of the company and peer-to-peer comparison or debt on the books that you can summarize for us?
Yes, so if I talk about the financials are looking okay to us. So yes, a CAGR growth in the sales is strong, but the
Mm.
CAGR growth of PAT and bottom line is only 18%, whereas in sales it is 40%. So what
Okay.
happened that company, since it has spent extensively on the marketing and research activities, so their margins are not that high, and the
Mm.
bottom line has not shown that growth in sync with what top line is showing. But I think going ahead, definitely this will help company whatever expenditure they have done in posting strong side of numbers, and their debt is also in the at a comfortable level. Going ahead, the company has already done the capex, so they will not be requiring much going ahead. So more debt will not get created on the books of the company, and that's why we are think that equity is in a comfortable position.
You were also talking about the sector. Any key, points that you would like to highlight about the cables and wiring sector?
Yes, so wires and cables industry, at present it is at rupees 1800 billion, which is expected to grow at a CAGR of 10% by 2027, and it can reach to rupees 2665 billion. So there is an ample of scope for the company to grow because the industry is very big. So industry is looking strong. The size of industry is big, and
Mm.
this company is having a market share of 5% in the domestic level, and in
Okay.
the international level 9%. So they are having a good market chunk right now.
What is the kind of holding period which one should have in mind?
Since we are expecting this company to post strong financial performance going ahead also. So I think
Okay.
3 to 6 months minimum one can hold. Minimum, this is I'm talking about.
What exactly should one be doing at this point in time? Should they subscribe to the offer? What are your views? Over to you, Asta, on that.
Yes, so for RR Cable, we are recommending subscribe to the issue for
Okay.
listing gain as well as long term. So if I talk about the positives of this company, first of all, this company is a high growth company. In the top line, they have posted the strong CAGR of 40%, which is highest among the peers which have been mentioned in the RHP, like
Okay.
Havels, Polycab, Finolex Cables, V-Guard, etc. Secondly, this company enjoys a strong market share of around 5% in India in the wires and cable market, while in exports also they are enjoying the market share of 9%. Uh, Third point, which I like attractive about this company, is that 11% of their revenue is now started coming from FMEG space, that is fast moving
FMEG space.
electrical goods space,
Mm.
which is a high margin business. And this is they are getting on the basis of the acquisition which they have done of the
Mm.
luminous fans and lighting. So
Okay.
that will be going to help the company in posting strong performance going ahead. Fourth point about this company is that they are into the B2C sales. So in the B2C channel of sales, again, margins are really good, and they have
Yeah.
already established themselves as a good brand. So it is not easy for any company to establish a brand, especially when it is into the B2C segment. So they
Mm.
have done extensive research. They have spent extensively on the marketing activities. There are two type of marketing activities: above the line and below the line marketing activities. Below the line is that when we target rural areas, not with the help of television or radio, etc. medium. So they have spent there on, and 60% of their marketing spend comes from that segment, and that is really helping this company in establishing a strong brand. So total
Okay.
1.3% of their revenue they have spent on the marketing activities, and that will be helping the company again going ahead. So I think on all these parameters basis, the issue is looking good to us. We are recommending
Okay.
subscribe. Definitely, listing gain will be there, but we are recommending it for a reasonable or a decent listing gain and a long-term gain also.
All right. Well, on that note, thank you so much for your time, Asta. That's all for now. But do stay logged on to ET Markets live stream for more on investment and trading ideas.